Hello children, good morning to all. Welcome back to our economic online class. In the previous class, we have completed our macroeconomic part. But as per our syllabus, from Indian economy, we have to study two more topics that are GST and demonetization. These are the part of third chapter in Indian economy. So today we will discuss these two concepts. So first of all, let's start with GST. Okay. So before GST, I would like to explain tax. What is a tax? So we know that government has different policies for the betterment of our country. For this, government raise fund through taxes. So a tax is a compulsory financial charge or some other types of levy imposed upon a taxpayer by a government in order to fund various public expenditure. Then there are two types of taxes, direct taxes and indirect taxes. So in the case of direct tax, imposition and burden of tax is borne by the same person. For example, income tax. Then in the case of indirect taxes, the imposition of tax on one person and burden of tax can shifted to another person. For example, sales tax. Okay. So these are about tax. Then now we can discuss about GST. So GST is known as goods and service tax. It is an indirect tax which has replaced many indirect taxes in India such as excise duty, VAT, service taxes, etc. So the Goods and Service Tax Act was passed in Parliament on 29th March 2017 and came into effect on 1st July 2017. Okay. So in other words, Goods and Services Tax is levied on the supply of goods and services. So Goods and Services Tax law in India is comprehensive, multi-stage, destination-based tax that is levied on every value addition. So GST is a single domestic indirect tax law for the entire country. So GST is based on the principle of one nation, one tax. Then the features of GST. GST is a comprehensive tax. So it means most of the central level and state level indirect taxes are subsumed under GST. So before the introduction of GST, there were various indirect taxes like central excise duty, service tax, state tax, central sales tax, luxury tax, entertainment and amusement tax, purchase tax, duties of custom, entry tax, etc. But after the introduction of GST, there is a one tax. That means most of the central level and state level taxes, indirect taxes are subsumed under GST. Then GST is a multi-stage tax. So it is levied on each of the stages of production. That means there are various stages of production. They are purchase of raw material, production or manufacture, warehousing of finished goods, then selling to wholesalers, sale of the product to retailers, selling to the final consumer. These are the process. These are the steps involved in a production and sale. So GST is levied on each of these stages. That's why it is a multi-stage tax. Okay. Then next is GST is a value-added tax. So GST is levied on the value additions, that is the monetary value added at each stage to achieve the final sale to the end customer. Okay. For example, a manufacturer who makes biscuit buys flour, sugar and other material, the value of the input increases when the sugar and flour are mixed and baked into biscuit. Then the manufacturer then sells this biscuit to the warehousing agent who packs large quantities of biscuits in cartons and labels it. This is another addition of value to the biscuits. After this, the warehousing agent sells it to the retailer. The retailer packages the biscuit in smaller quantity and invests in a marketing of the biscuits, thus increasing its value. So GST is levied on this value addition, that is the monetary value added at each stages to achieve the final sale to the consumer. Okay, so GST is a value added tax. Then GST is destination based. As the tax would accrue to the taxing authority which has jurisdictions over the place of consumption. Okay, for example, suppose goods manufactured in Maharashtra and sold to the final consumer in Karnataka. Since the goods and service tax is levied at the point of consumption, so the entire tax revenue will go to Karnataka and not Maharashtra. Okay, that's why it is a destination based tax. Okay, as the tax would accrue to the taxing authority which has jurisdictions over the place of consumption. Okay, so these are the features of GST. Then components of GST. What are the components of GST? So first one, CGST, that is Central GST, Central Goods and Service Tax. It is the tax collected by the central government on an intra-sale state sale. What do you mean by intra-state sale? That is a transaction happening within a state. Then second one, SGST, that is State GST. It is the tax collected by the state government on an intra-state transaction. What do you mean by intra-state? That is the transaction happening within a state. Then third one, IGST, that is Integrated GST. So it is a tax collected by the central government for an interstate sale, that is transaction between two states, that is interstate sale. So there are three components of GST: CGST, SGST and IGST. So in the case of intrastate sale, there are two taxes, GSTs, that are CGST and SGST. Then the sale to another state, there will be only one tax, GST, that is IGST, Integrated GST. Okay. Next is categories of GSTs. So there are 5 categories. First one, 0% slab or 0% category. So the essential goods and food items come under this category. Then second one, 5% category. So goods which are widely used come under this category. For example, shoe, tea, coffee, transportation, train ticket, small restaurant, etc. Then the next one, 12% category. So mobile phones, medicine, especially Ayurvedic medicines, etc. come under 12% category. Then 18% category. So for camera, mineral water, laptop, monetary, etc. they impose 80% GST. Then 28% slab. That is, it includes branded items. That is, luxury items and 5-star hotels, etc. are come under 28% category. So these are the categories of GST: 0%, 5%, 12%, 80% and 28%. percentage. Then what are the advantages of GST? GST has mainly removed the cascading effect on the sale of goods and services. That means GST regime eliminates the tax on tax system. Okay. So what do you mean by cascading effect? That means before GST, when goods were manufactured and sold, excise duty was charged by the central. Over and above the excise duty, VAT was also charged by the state government. Okay. So it leads to tax on tax effect, that is known as cascading effect. So, but after the introduction of GST, these taxes are come under one category, that is goods and service tax. So it also leads to reduction in the price of goods and services. Second one, the cost of good decreases. So due to the one tax, due to this one tax, the cost of good decreases. Then GST is also mainly technologically driven. That means all the activities like registration, return filing, applications for refund and response to notice needs to be done online on the GST portal. This accelerates the process and also reduce tax evasion. These are the advantages of GST. Then this system is not good for all. For example, all the business, especially small one, are not equipped with technical skill. So it adversely affects such business. Then increase in operating cost for small business. So due to GST, they have to bear the additional cost of hiring expert, GST expert. Then the third one, lack of awareness. Most of the people are not aware about GST procedures. So these are the disadvantages of GST. These are the main points related to GST, and also you have studied it in your accountancy classes. So children, you have to study this topic very well. Okay.